Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. It's a fourth straight day of declines for the market as Nifty trades below its 200-day moving average. It has also slipped below the mark of 10,100, and all the sectoral indices trade with cuts while metals lead the fall. NMDC is one of the top losers on the BSE 500 index, falling to its lowest level in 6 months after iron ore prices post a sharp decline. Interglobe Aviation also declines for the fourth straight day after the airline is forced to ground its third aircraft due to engine failure. Ultratech Cement enters into a separate agreement with Adani Cement to acquire the company after Adani's creditors chose Dalmia Bharat as the acquirer.
Okay, those are the set of headlines, but really it's about the markets, and the markets are the headlines, and the headlines are not too pretty. We are knocking on the doors of 10,100, and that is not to say that's the end of the stress, because it's not that the global markets are really too positive. And again, global markets really haven't helped our markets perform well. I think month to date, we've been big draggers, and that underperformance continues. Bring up the heat map. I'm sure the mid caps and the small caps too are under pain, so no point in dissecting that. The advanced decline ratio would be terrible. About 2 percentage points apiece for both of the key indices, and the market breadth looking extremely poor. 1:7 or 1:8 in favor of the declines. But the heat map will show you a fair bit of red, and the stark contrast to how it started off, which is a fair bit of green. A mirror image, to be honest, of what it was at the start of the trading day today. A fair 4 rows of green, 1 row of red today. Right now, 4 rows of red. And just look at the top losers. Again, this is a scenario which is very similar to what happened 2 days ago, wherein the top 10 losers didn't have too many heavyweights. We are falling without major contributions or major stocks like Reliance or the HDFC Twins or some of the others, or ITC, not really falling so much. Look at the top losers. It doesn't have the mention of HDFC Bank, Reliance Industries or ITC. HDFC makes a brief appearance out here. So it's not that the heavyweights have really fallen in a meaningful way. A lot of other stocks are falling in large numbers, and which is why this pain that we have. It's just about 1%, but it's still looking ominous. One last thing, I want to bring up the chart of the volatility, and this month how the spikes in volatility have been. We are right now close to about 16 odd levels, but just look at it. The volatility index is rising ahead of the fiscal year end, and the swings are really picking up as we head to the close of the quarter, of the month, of the financial year as well, which is typically not a very good sign. But if this is the scene in the large caps, what about the more liquid universe? Not necessarily just the large cap, but all that's included in the F&O space. Navneet, what are you spotting?
Well, Neeraj, the picture is not looking great at all. The call writing continues, and the volatility also continues to surge, which may not be a great sign for the bulls now, as we've also breached the 10,100 mark in trade, as currently Nifty is still trading above the mark of 10,100. Well, a lot of key indicators or key levels that one was watching out for have been breached. For example, we're trading way below the 200-day moving average, which was somewhere about 10,160 for the day. We've also breached our recent low of 10,140, and if these levels are to go by, we've also breached the 10,100. Now, a crucial thing to monitor in today's session will be where the closing exactly comes. Can we close above the 10,100 mark or no? Will be very crucial. Well, in terms of Bank Nifty and Nifty futures, remember in Friday's session there were a lot of fresh build-up that was seen for the Bank Nifty futures and also for Nifty futures. As we speak, Nifty futures still continue to trade with a premium, and look at that, 16% higher for Bank Nifty futures. That's telling you at every level there are fresh short positions being taken for Bank Nifty futures. In terms of options data, we've seen aggressive call writing on the 10,200 strike today, and as I speak, nearly 16 to 17 lakh shares have been added, and we've also seen a lot of put writing coming in for the 10,000 strike. And remember, 10,000 put is the strike where maximum OI concentration is. Despite of the market fall today, no major unwinding actually has has been seen on the 10,200 and the 10,300 put strikes. So if we breach another crucial level of 10,000, probably that's the time when you also get to see the 10,000 put writers unwinding their trade, which would only mean the selling could get accelerated. So watch out for these important levels. Just two stocks I want to highlight. One of them is Bank of Baroda. If we could just pull up the intraday chart, at one point of time, the stock had fallen nearly 8 to 9% in trade, and still it's trading with cuts of 8%. Today's fall on Bank of Baroda has come on very high volumes on the cash side. If you just compare the volume today with Friday's volume, it's almost more than double. Looking at the futures as well, it's trading. We've seen a lot of fresh short build-up coming about, and the stock is nearing its 52-week low of 128. The other one is NIT Tech Accounter, which we've been highlighting for you, doing pretty well. In fact, it's one of the top performers on YTD basis. It's one of the top gainers on the Nifty 500 index on YTD basis. But some profit booking has kicked in as the market sentiment has turned weak. It was down 6% on Friday, down another 5% in today's session, telling you that there is profit booking also now kicking in some of the IT stocks, Neeraj.
It's not really looking all that great for the markets, and therefore the piece of good news surrounding the property markets is probably not showing in the way the stocks will be doing as well. But remember, in the morning we did this conversation with two experts on what would the recent changes, proposed changes or actual changes, lead to in terms of offtake and pricing. Now the conversation with the next expert is about how to make use of the recent developments into investing into some of the real estate stocks. If not now, then maybe at a later point of time, or maybe now as well. Let's get in Dhruvesh Sanghvi of ProsperoTree, who joins us right now with his thoughts on how to approach investing here, considering the developments that have happened. Dhruvesh, good having you. Thanks so much for taking the time out. Now, a bunch of green shoots over the last 12 odd months, but it's after a while that I don't remember last time that there was conversation of property tax being waived off completely, even though it's for flats which are sub 700 square feet carpet, which is probably not a small area in the city of Mumbai, and the possibility of a downward revision of ready reckoner rates. What would this mean to your mind for volumes, and thereby what kind of companies stand to benefit as a result of this?
So again, we have to understand that ready reckoner really affects the areas where the prices are low. So generally it would touch to places which are outer the city areas. In most locations within Mumbai or within the 4 metros, we will not have situations where the ready reckoner rates are almost touching the real rates. So howsoever the industry people may crib about it, but if you check the facts, the pricing is generally 20, 30, 40% higher than the ready reckoner rates, even today after not so good price scenario. So ready reckoner rate, let's say if they fall in Mumbai, it doesn't affect anything. It doesn't change anything. But there are certain spaces outside the city areas where the ready reckoner rates were, let's say, X, and the real pricing which was felt in the market was lower. So industry demand was coming from people who were building those kind of townships outside the space. So I mean, let's say we talk about Hiranandani's. So they built typically 200, 300 acres of land outside city areas. They were the bigger users of these kind of requirements, and I think they would be rightly excited about these things. But within the space of, let's say, Mumbai or core Delhi or core Bangalore, I don't think it would have any significant impact, except maybe a couple of projects specifically having any changes due to this, yes, but at large no change due to ready reckoner. This is what my understanding is.
Okay, if the property taxes get waived off for flats sub 700 square feet carpet area, would some of the affordable housing players see a meaningful pickup in volumes? Is that an amount large enough for people to get excited about?
So property, let us understand the genesis. The idea is housing for all by 2022. It may not really work out by 2022.
Sure.
But there is serious amount of already things that have happened in that direction. And if property taxes are waived off, it will be one more incremental positive in this direction. The tailwinds for this units, sub 5,000 rupees, across India has been set. We can, I mean, in the coverage of our own stocks or which are there in the listed space, there is huge launches already lined up by people who are in the affordable housing space. So the one which we track, for example, Purvankara, they are talking about launching 1.5 crore square feet in the next 2 years. This is equivalent to their entire history of launches, and this is coming at a time, history of cumulative launches.
Of course,
yeah, and this is coming at a time when the industry supposedly is not doing too well.
Yeah, but astounding numbers then. I mean,
absolutely.
Which raises the question mark on the execution ability as well, right?
So already they are doing, I mean, because I have a positive view, it could be biased, but they have already done 400 crores or 500 crores worth of annual sales just out of affordable housing, coming from 20 lakh rupees to 50 lakh rupees apartments.
Fine.
So it's I don't think there is a question of execution.
No, but Dhruvesh, sorry, excuse me, but that is about the value that they have derived out of these sales. The point is, if the total cumulative history of launches is less than 1.5 crore square feet, and if they're talking about launching 1.5 over the next couple of years, I mean, the question mark remains as to how will they execute it and whether there is an appetite for such a large pipeline.
Yeah, so this is where your evaluation or anybody else's evaluation may really help. But in a nutshell, they are doing it across locations. It's not just in Bangalore. So they are doing it in 8 to 9 cities. And when we say that they are going to launch 1.5 crore square feet, it is going to be segregated across multiple projects within the same cities as well. So, and we are talking about ticket sizes of 20 lakhs to 50 lakhs. It is not just about Purvankara. This is just one name because it is listed. People are quite gung-ho about the overall affordable housing space. A lot of builders are trying to fit themselves into that configuration to take the advantage of tax, because the affordability is a little bit of an issue over the last few years. Now they have come to realize this, and now land prices have also seen certain amount of correction at pockets. So there is infrastructure boost in certain cities. For example, in Mumbai, there is 150 kilometers of rail lines coming after how many years? I mean, the last rail line was in the British era. The last flyover time was in the Shiv Sena of 2004, I believe. All this cumulative built-up of 50, 60, 70,000 crores coming on stream into a city like Mumbai would in itself create a humongous demand over the next 10 years, and that is the bet these builders are taking.
Yeah, well, we've had harbour, to be honest, after the British era as well.
Yeah, I mean, I'm just trying to say that 150 kilometers is our total lines, and we are just adding almost similar amount of metro lines by 2020.
Sure. Yeah.
So from that angle, it's a huge amount of infrastructure which is coming just in this, and there are metros being coming in almost 8 to 10 cities.
Sure.
It should eventually help. And again, the same argument will come that if affordable housing has to go up, it doesn't mean that the premium housing will go up. So it has a completely different dynamic. For example, if we speak about a Mumbai, it would have a completely different dynamics versus the real estate of India. It may not be very, very linked.
Sure.
It's just been included in the Gazette right now that the rates can be revised downwards to ready reckoner. I think the prices, the new rates will be coming out on the 1st of April. I'm just reading one DNA report, and this one says, according to their sources, the prices will actually go up by 3 or 5%. I'm just telling you, besides 2009, the ready reckoner rates have gone up every year, and considering the recent budget of the Maharashtra government, they have to now account for farmers' demand as well. Stamp duty contributes one of the biggest portion of their revenues. What is the likelihood? Because if they revise it downwards, it's only going to impact the government. How is it going to impact the builders?
Now, that is, I mean, I don't think I would be able to answer to this larger context of the government finances.
Right.
But the idea is, the stamp duties are paid on the deal values or ready reckoner, whichever is higher. So not necessarily all deals are happening at ready reckoner or near around ready reckoner. For example,
mostly it's above it.
Mostly
right?
it is above. Yes. Mostly in most of the locations it is above. So let's say if the prices are 120 and if ready reckoner change from 100 to 97, still the deal values are going to remain at 120 or 115, whatever is the market determined price. And I don't think ready reckoner has direct contributions coming. And the highest amount of stamp duty will typically come from the higher price areas.
Correct. Correct.
where the ready reckoner any which ways doesn't have a big impact. So from the government point of view, I'm sure they must have done the work of how much they are going to lose and how much they are going to gain in certain areas. But there is genuine price fall in exterior parts of the cities. And to account for that, you have to bring down the ready reckoner values.
So has the demand picked up with that price fall? Are we seeing more of registrations?
Demand cannot come just by one news. A buyer really doesn't care about what the ready reckoner rate is.
Let's say over a period of time, we have events like,
last 3 years, the data...
GST, we've had RERA coming into play,
right,
which has played a great role in it. So, From
my understanding, I think we are at the lowest point of, lowest period. You cannot really pinpoint a time, but we are at the lowest period of the home sales data. There is no particular data, but I think Knight Frank or JLL is coming out with top 8 cities or top 7 cities registration every quarter. I think this is around 2 to 3 lakh homes per year in India out of the top 8 cities. I think this is the lower end of the overall. I think this can go to 5-6 lakhs over the next 5 years.
Okay, one last question, Dhruvesh. What is it that you're bullish on? I think you mentioned Puravankara. If that is your top call, then why? And if not that and something else, then why?
I would like to speak about Puravankara, but just one line. Anybody should think about real estate as a basket, because it will be very difficult which player in which location will do good at what time.
Sure.
So for us, it is a mix of a couple of stocks in the premium space, in the affordable space, and yes, Puravankara is one of them. We like it because of its aggressive launches. It is going to launch all these projects without increasing its debt. So why it is able to do that? Because it has a large amount of ready inventory in the affordable space, and even in the premium space, it falls under the category of 50 lakhs to a crore. It is not just Mumbai, and they have tasted success in Pune. They have tasted success in a certain non-Bangalore locations, which typically, if you have not understood the company well, we will think it like as if it is a Bangalore-based company, but not more than 50% comes from Bangalore. So it's well diversified, multi-location and multi-projects within the single location. And it has the it started the affordable housing into affordable housing space much before the concept of affordable housing came into picture. So I think their affordable housing subsidiary started in 2009, and they have a big leap of first mover advantage out there versus a lot of other players. So they run the affordable housing brand under the brand name known as Provident. So it's known as Provident Housing, and where there will be these tax benefits and the benefits to the buyers in form of Pradhan Mantri Awas Yojana. There are other builder benefits in terms of you get credit at a subsidized rate under this scheme. So I think all of this should play out well over the next 3 to 5 years for this company.
Great. Remember, you can't really give any kind of expectations of returns, etc. But broadly, this is the view from ProsperoTree. Still bullish on real estate. Approach it as a basket and not necessarily as an individual stock investment recommendation or investment practice. Dhruvesh, many thanks for joining in today and giving us your thoughts. Much appreciate you being with us today.
Thank you.
Okay, let's move on and get to our next segment. Newspaper reports suggest that the government may grant infrastructure status to hotels above rupees 50 crore. How is it likely to impact certain specific companies? Let's ask Vishal Kamath, who's the director at Kamath Hotels. Mr. Kamath, good afternoon to you, and thanks a lot for joining us today on Bloomberg Quintwell. I think the clearance is still pending with the cabinet of this, but tell us if it actually comes about, if the hotel industry gets that infra status, obviously for projects above 50 crore, how does it impact a company like yours?
Namaskar. I think it will impact company like us positively in the long term. The biggest challenge our industry has faced over the last many years has been overcome to a good extent. There has been a lot of movement and tractions of corporates or families of spending again. And that will help us have more confidence to now further go ahead with bringing up projects, because a lot of hotel companies had stopped bringing up new projects because the ability to finance these, because it was not having certain, because hotel industry is a highly capital intensive industry, as you may know. So I think this in the long term will help our industry a lot.
Just for a better understanding of our viewers, currently a player like you, for financing, on an average, what rate do you pay for cost of financing?
See, madam, more than the rate, because that depends on company to company, what actually is the term periods of repayment. That is really the crux. It's not the interest percentage as much as it is the payment cycle. A bank normally gives you a loan and the moratorium period is short, and then you have to start paying the principal and the interest while your project is going on. The biggest challenge lies that the moratorium period is so short. Today, to make a decent hotel takes anywhere between 2.5 to 4.5 years, depending on the size, depending on the standard of the hotel. A good 4-star or 5-star hotel could take anywhere 3.5 to 4 years. Now, in 2 years, if I have to start paying the principal because my moratorium period is over, that is definitely going to strain our project financing. So these are the benefits. One, definitely interest rate because of infrastructure is 2. And, the tenure, normally a bank loan tenure is fairly short for a hotel industry project of our sizes. And this would, I think, help that also. So more than the interest rate, I think the holisticness of this will help our industry.
All the concerns which you just highlighted, if this proposal gets cleared, will be addressed?
Definitely. I think that is the objective of this proposal, to address these concerns.
Okay, Mr. Kamath, before I let you go, what are the current trends that you're witnessing in terms of occupancy rate in the current quarter?
See, this is a season which is always high, this and the last season before this, before the monsoon. But this year, more than this quarter, what we are seeing is the coming monsoon also has very good traction. Unlike last year where there was a comparative dip, this year we find that even in the coming monsoon season, business will be quite buoyant. Rates also will not come down like traditionally that happens. Rates will remain stagnant. They won't go up probably that much, but they will definitely remain stagnant. And I think that itself is a good sign for our industry, which has been dealing with tremendous cost pressures.
And any new properties that you're opening, and what's the target for FY19?
So right now, madam, we are not having any new targets. When they are there, I will definitely get back to you and your viewers. But and targets, so we target to do the best that we can.
Okay, Vishal, good afternoon. Neeraj here. Just one quick question. Your numbers had started turning around quite meaningfully when I looked at your second quarter numbers. Things compared to that probably came off a bit. How do you expect to end the year with?
We expect the year to be ending on a positive note. Because as I have said, Neeraj, to you before also, the industry has turned around. Last quarter has been good. This quarter also we expect it to close well. And that is an industry trend. People have been spending. There have been a lot of good exhibitions that have happened in our key markets, our resorts. Now even this year ending, I hope will be very good for our resort destinations, especially because it's a long weekend. We already see the booking charts are almost full. So I think that it should end on the hospitality note for especially resort and leisure on a good note.
Okay. We wish you all the best for that and more. Vishal, thank you so much for taking the time out and being with us today.
Namaskar.
Namaskar. That's Vishal Kamath, Director of Kamath Hotels. With his thoughts. By the way, no, just the Sensex is probably doing reasonably okay. Otherwise, the Nifty is still languishing under pressure. We'll talk about all of these and more in moments from now with our technical experts as well. I think it's important to get in one of the biggest global market voices that we can have on the session today. Remember, all the uncertainty and volatility really playing havoc with the investors. Let's get you Sean Darby. He's Chief Global Equity Strategist at Jefferies, joins us right now on the show from Hong Kong. Good having you, Sean. Thanks so much for joining in. I looked at a report that came in from you guys, and you mentioned, I think you particularly mentioned that America will see a boom during the course of the year. My question to you be, what happens during the course of the very near term with all the uncertainties that we have, including the Fed meeting?
It's been a very strange sort of 14 weeks. We had enormous political eruptions through Russia, even with rapprochement with North Korea. We've had, of course, big, see changes in the trade negotiations. We've just recently come through a sea change in the leadership in China. Ironically, last week, investors put in their highest amount into global equities, near 43 billion, and extracted that from money market funds. So appetite is actually quite appealing in terms of the way that people are viewing risky assets. In that sense, I don't think necessarily the growth story is over. And as I said, as you mentioned about the view on global capex, this theme is starting now to move out, not just move outside of the United States and move through Europe and Japan. So in that context, investors have a much wider breadth of stocks to invest in. And I think secondly, we've seen some of the worst of the US long bond sell-off. We've still got 2-year bond yields selling off, but the most dramatic impact for equities always comes from the long end of bond markets, and that 3% ceiling on the 10-year has actually been quite hard for the 10-year yields to break through. So in that sense, risk appetite has been reasonably good, and I think for the next week, once we have the finish of the FOMC meeting on Tuesday, equities will probably still try to advance further.
Sean, we've had this scenario wherein yields have already gone up. Now, what happens now if rates play catch up in a meaningful way with the yields? We've already seen the bitter end of the stick with the yields moving up. Will rates move up cause further havoc in bond markets, in equity markets?
I think to some extent that has played itself out, and certainly perhaps equity investors are looking at that. I think the only thing that can upset that story would be if the dollar were to begin to rally. Positioning has been very strongly focused towards EM over the last 6 months, and equally the dollar theme has been hurt by this emerging global trade war. But if the dollar were to stage a sharp rally in the context of perhaps a much more hawkish Fed, or sentiment were to turn towards more tightening in 2019, than that's faster than envisaged, that would possibly be the worst scenario for equities. So at the moment, we're still moving us through a sort of Goldilocks environment. Rates have been, to some extent, fully priced in the short end. The dollar's remained weak, and global economic activity indicators have remained in expansion mode. So a relatively good environment for equity investors.
What about the two big elephants in the room? One is valuations and the way they stack up, and two, oil, which is probably a big variable and no longer at the levels that it used to be at about a year ago.
So in terms of the crude oil price, there's been a very, very strong relationship with the dollar, and perhaps the bottoming out in the dollar has given less of a underwriting to the oil price over the last 3 months. But if you look back from September last year, the biggest sea change to the oil price was a weakness in the dollar and huge imports of crude oil into China. I don't think necessarily the commodity story is over. If you look back over the last quarter, the commodity indices have seen extraordinarily good breadth. I think outside of natural gas and food, the bulk of the commodity complex has actually increased. And I think also, provided global growth is strong, I don't necessarily think there's going to be a serious relapse in the crude oil price over the next 6 to 12 months.
Okay, my final question, Sean. What about this increased rhetoric on trade wars and the impact thereof? One, what happens to the big nations on their individual businesses is one thing, but two, what happens to the suppliers of a lot of products from the emerging market economies and thereby the markets thereof?
The way to look at trade wars is that they are a zero-sum game, and almost sort of mutually assured destruction because of the way the supply chains and the feedback loops work. So in the first instance, a trade war will, of course, increase some of the domestic costs in a country. The second is that it can also deter foreign direct investment into that country as countries sort of make capital flows more restrictive. And in that sense, the capital flow story is much more of a virus for financial markets, because these patterns of money movements have been very long-standing in some cases. For example, financing the US Treasury positions, the financing of the US Treasury deficits. This is a much more complex game, and I think the more you go down a trade war, whilst there's a direct impact on GDP, perhaps for the financial markets, it's the changes in liquidity that become much more of a headwind for asset prices.
Okay, Sean, we'll leave it at that. Many thanks for joining us today and giving us that perspective. That's a very important market voice. The Chief Global Strategy Head of Jefferies, Sean Darby, with his thoughts on all that's happening in the markets and what could happen. They are bullish on America, and equity markets by and large near term could be volatile, as Sean Darby said. As we speak, we are very, very close, perilously close to 10,103. Something tells me that this might not be the end for today's session itself. Let's get in our expert voices, though, who can predict that better. Hemen Kapadia of KRChoksey joins us right now on the show, as does Sumeet Bagadia, Associate Director at Choice Broking, with his thoughts. Gentlemen, both of you, good afternoon. Thanks for joining in. Hemen, we're just about holding on to 10,100. But my question is, are we on course for a 4-digit Nifty number soon?
Very good afternoon to you, Neeraj. Yes, looks like. But we'll see a bounce before that. But yeah, I think we are on course for 4-digit number. I don't think it will hold for very long. We'll see a recovery, but a recovery first, then a fall, then a recovery.
Hence, you're suggesting to go for 10,300 call?
Yeah, I have a feeling it formed a XABC. This is the fifth of the third. There'll be a fourth, then there'll be a fifth, and then we'll see a recovery. So that's why I have a buy on the 10,300 call option, because I have a feeling extreme short term, we are a bit oversold. Sustainability seems suspect, but yeah, a bounce seems to be in order.
Okay. Sumeet, what about you? Would you suggest to hold on to shorts, or it's time to book profits?
Hi, good afternoon. Well, at present it's better to be on sell side only, because Nifty has broken the support and it's trading below 200 DMA, which is again a negative sign for the index. And if the Nifty is able to give close below 10,140 levels today, that would be a bearish sign for the downside target of 10,030, 10,000 levels. 10,100 is immediate support. If that is taken away, we can see fall till 10,000, 10,030 levels. I think till that time we don't see any convincing bounce back or any strong up move above 10,150, 10,200 levels. It's better to be on sell side. Those who have taken sell positions, they can hold on the existing short positions for the downside target of 10,030, 10,000 levels in the next couple of days. Nifty and Bank Nifty both have broken the supports, so it's better to be on sell side only.
Both the indices have been trading below their 200-day moving average. But Sumeet, in terms of individual stocks, what are you recommending today?
See, as far as individual stock specific move is concerned, we have a buy as well as sell call. First one is sell on DLF. DLF is looking a bit weak for a trading perspective for next 2 to 3 days. There is a possibility that we might see a small correction in DLF, on which downside we can see move till 210 or 207 levels. For a trading perspective, one can initiate sell position in DLF at the current market price. If there is a pullback of around 2 to 3 points, then that should be used as a selling opportunity, with a strict stop loss to be placed at 227 levels on higher side for the downside target of 210 levels. The second stock for the day is on buy side, and that is from FMCG space, HUL. Hindustan Unilever is looking good to me. We feel that from here on there is a possibility that we might see upside move, in which we can see levels of around 1350, 1360 as an immediate target in next couple of days. So for a trading perspective, one can initiate long positions in the stock at current market price. If there is a dip of around 10 to 15 points, then that should be used as a buying opportunity, with a stop loss to be placed at 1285 levels on lower side for the upside target of 1350 and 1360 levels.
Hemen, I believe we still want your stock recommendations.
Yeah, I like NTPC and HUL. Both look like 2-3 day bounces, Neeraj. So I think target of around 1328 on HUL, and NTPC very slow heavy stock, so target of around 172, stop loss 163.
Can't not have a conversation about PSU Banks today, Hemen, after a really good, strong bounce back, and I'm using strong on purpose. After a strong bounce back last week, today they paid hopes of bull traders and investors alike, if any. What do you do here?
I know it sounds almost like sacrilege talking anything positive about the PSU banks. There's a NSE Nifty PSU bank index, Neeraj.
Yeah.
Battered out of shape. I have a feeling it's been okay. It's a very dangerous statement to make, but I think it's been overdone. There's no juice left. There's nothing in terms to achieve by adding any shorts at this point in time. So I have a feeling that, and yeah, I don't know. Maybe it's gone down so much, but it made a bottom 4 trading sessions ago at around 27.69, Neeraj, on 12th March, and we haven't broken that. So mild technical green shoot. I'm not saying there's a epoch-making trend reversal, but I have a feeling that it's a bit overdone. I don't think there's going to be a grand breakdown from here. Maybe they'll meander aimlessly sideways, but I don't think there's a big crash in PSU banks now.
Well, the Nifty PSU banking index is one of the top sectoral losers. Besides the metals index, that too has cracked sharply in trade. Nifty metals index is trading with cuts of nearly 3%. And remember, the constituents which have seen maximum losses there are the likes of NMDC as well as Steel Authority. Sumeet, on the charts, NMDC, which has fallen sharply, down 7% on back of that news that the iron ore prices in the Chinese market have fallen. Would you take a fresh position here on the downside on NMDC or Steel Authority?
See, metal stocks are looking weak to me. If there is any pullback or bounce back in the stocks which you named in like NMDC or SAIL, Steel Authority, then there should be, then one should initiate sell positions, because on higher side there should be some selling pressure again, which should take stock prices lower. Most of the metal stocks are looking weak only, and we feel that next couple of days are going to be weak for metal stock. NMDC has a support at around 115 levels. Once the stock is able to break the support levels, then there is a possibility that we might see the extended sell-off, in which we can see levels of around 110 or 108 in next couple of days. So for a trading perspective, there is any pullback or bounce back in the prices till 120 or 121 levels, then that should be used as a selling opportunity in NMDC for the downside target of 110 or 108 levels. At the same time, Steel Authority is also looking weak to me. If there is any pullback or bounce back in the prices till 69, 70 or 71 levels, then that should be used as a selling opportunity, with a stop loss to be placed at 73 levels on higher side, and on downside we can see levels of around 64 or even 62 in next couple of days.
Okay, let's get in Sanjiv Bhasin, Executive Vice President for Markets at IIFL. He joins us right now on the show. Remember, in the past few instances, Sanjiv has mentioned that he believes that there is an outside chance or a real chance of the markets moving lower, save for some periodic bounces. Sanjiv, good afternoon. Thanks so much for joining us again here at Bloomberg Quinn. Now, today it looks ominously close to those 4-figure levels as well. The question is, Sanjiv, will it be a slow, painful lumbering down to 9900, 9800 or 9500 as the case may be? Or do you believe these moves now will be swift in nature?
Yeah, hi Neeraj. So yes, regularly we've been telling you that anything above 10,005 to 700 was a bubble, and rightly so. So yes, 97 to 9900 is an ideal bottom which we think can be reached. The time price correction may extend over the early part of April also, but we think come the second week of April you should start to see stabilization and then a gradual move up. So I think May onwards will be really out of the woods, and that will be the time this 3-month correction will be over. And in the short run, like we said, 97 to 99 is the first base which we think where you can hit. Can we go below that? That may be pessimism at its highest, but we think that now from here downwards, this 300 point is an opportune time to accumulate stocks or sectors where you've been bullish and where you have conviction going, and look forward to the next 3 to 6 months being relatively more stable and more profitable.
What could lead to this bounce back, Sanjiv? It's a matter of valuations looking a lot more appealing at 9700, 9800, or since you mentioned April, it's a return of earnings season in its full glory that could lead to the markets finding that bottom.
Correct. Then why are you in the stock market? Why is this whole euphoria in the last 2 years of a bull market? And truly so. So we are seeing earnings definitely starting to catch up. You've seen 4 macro indicators: CV sales, Ashok Leyland, Tata Motors, the whole gamut of autos. I would say Thermax, as a disclosure, Thermax is one of our top picks. It makes the largest industrial boilers, and it is saying it has the order inflow, the strongest it has ever seen in the last 18 quarters. Thirdly, construction and infra related plays like L&T, which are again the order book because of the Middle East engineering business is seeing a strong traction. And fourthly, Bharat Forge, which is telling you that the commodity cycle is on the uptick, and they've again given forecasts which are very, very bullish. So slowly but surely the underpinnings of the economy turning are strong. 97 to 99, where the larger part of the market, the broader market, would have given you almost a 15 to 50% correction. And thirdly, like we said, you would have played all the imponderables, as in the PNB fiasco, the higher bond yields, the rhetoric on politics, and the overseas correction. April, May onwards, we would think that most of the negatives would be priced in, and we think that a fresh impetus or a fresh market rally is on the cards for the next 6 months from May onwards.
Sanjeev, I guess as a house, you guys are bullish on ITC. What's the rationale behind it? Is it the valuation gap that exists because ITC has been trading at a discount to HUL and also the Nifty FMCG index, or there are some other factors behind it?
Yeah, so I've been relatively bullish for ITC from the last 3-4 months, and maybe it has not done much, but that's the whole value creation. Because if you see any of the businesses, leave aside cigarettes, you are talking of paper, where they are the 3rd largest player. They've just forayed into Odisha, where they are saying that for pulp manufacturing locally, they are going to start a lot of initiatives. Look at their milk products, look at their FMCG, look at their hotels, look at their ITC Haryali, and look at their apparel business. You talk of Arvind and the other brands. Will's Lifestyle itself is a business worth 4,000 crore. So sum of parts at 27, 28 times or 26 times, ITC is a no-brainer. I continue to hold it will be one of the best Nifty stocks in this year, and we think even 320 and above could be the target for ITC. So for us at these levels, ITC is a must buy in a portfolio.
Okay, and besides that, I guess you're also bullish on L&T, which I know you've already highlighted. Do you think it's going to be the best play in the next 1 year in the capital goods space?
Correct, and you want to be with pedigree names which have delivered. Now L&T's 20%, 25% business was in the Middle East, which was on hold. Now oil from 40s back to 65. We are seeing strong accretion in the engineering business over there. That will add to the bottom line locally. Hydrocarbon, petchem, engineering, power, all those projects are seeing strong traction on the upside. So L&T becomes proxy to any revival in the GDP and growth on both consumption and on the infrastructure side.
Interesting. Okay. The last 3 or 4 conversations on specific stocks that we have with Sanjiv Bhasin, he's been recommending Nifty names. Forget large caps. He's been recommending Nifty names, which clearly shows his bent of mind towards the large caps. Sanjiv, what about the promising mid caps? Are you avoiding them right now? Because when the market turns around, a large portion of money will start chasing the obvious, which is the large caps?
Correct, and mid caps, again, I can go on, if you are saying these were my 4 themes last year, all related in February to the extent of the summer wave which is coming on. So Voltas becomes a good proxy. As a disclosure, Volta was 350 last year, it's 670 or 630. But still, I think Voltas has enough traction given its cooling business, which is doing extremely well in the Middle East. We would say Indian hotels, where average room rates have started to show accretion, and the company has gone through a huge debt restructuring with the hiving off of some of their overseas acquisitions. Third would be Thermax, where again I've pointed out the part of the industrial boilers. And fourth would be Tata Global, again a pedigree name which has delivered well on the numbers. Coming to construction and the real estate side, NBCC continues to be my top pick on the back that their order inflow locally in Delhi itself is showing you huge amount of execution and project appraisal. Sadbhav Engineering, it has been one of the better beneficiaries in the order inflows. Dilip Buildcon, again a huge amount of order inflows and execution on the infra place, and you can add on correction on Nagarjuna Construction. I would also say some of the real estate plays, particularly Godrej, Shobha and DLF in that order. I think the second half of the year will see huge amount of inflows into fixed assets. So real estate could be a added beneficiary of the whole exercise.
Sanjeev, any view on a couple of these Tata Group companies where outperformance has been seen from stocks like Titan? There are a couple of your Nifty stocks like Tata Steel, which has also come under pressure in today's session, and Tata Motors. A lot of analysts on the street has been suggesting it's the cheapest stock among the Nifty constituents, but day after day it's been hitting its fresh 52-week low.
Yeah, that's the unfortunate part. I mean, Tata Motor has been cheap and only getting cheaper. It continues to be the cheapest auto stock, not locally but globally. And it's a value trap, but I think that somewhere down the line they will be constructive buying, given that the CV cycle locally has turned around and they've seen a lot of traction. So Ashok Leyland has been a bellwether over there. I would expect that to flow, but the problem is Tata Motors has a huge dependence on the British economy, and their hedges against the pound have worked on the negative. We have to see how the JLR sales plays up, and I think that somewhere there will be a lot of value creation, but right now technically it is a weak hand, it is a weak stock. Coming to Tata Steel, 525, 530 is the price of the rights issue. I think there's a 30% right which will come on the street in the next few months. So 560 is a very good place to start to buy steel. I would say commodities has run far in excess of valuation, and now if you have a stronger dollar, which we will know once the Fed meet is over in the next few days, then some of these proxy plays become very good. So if I'm suggesting it's 97 to 9900 is the keyword next month or within the next 40 days, then Hindalco closer to 185, 280 on a Vedanta, 550 or 560 on a Tata Steel, and this 65 level on sale. These become very, very valuable points because the price is in your favor, and underlying the fundamentals globally for commodities and base metals seem to be very, very positive in the next 6 months.
Sanjeev, one sector which has been in focus in the last 4 to 5 weeks is the banking space, especially the PSU banking stocks. Considering the correction that we've had, are you looking at any sort of value picking, considering the valuations have corrected? If yes, if you could name those stocks.
So again, we know the weakness is evident, and the stocks have been huge underperformers. But like you said, banking board, government, and some sort of reconciliation with. I was surprised to hear the news some time back that Binani Cement says that they want a comfort letter and they would go with Ultratech. So it's telling you that some of the NCLT assets could actually find prices much above what the street is making out. And once we get 3-4 of those big deals done with, it will be a huge impetus for some of the PSU lenders. Namely the Bhushan Steel, the SR Steel, the Binani Cement, because you have big players who are ready to give a higher pricing because they feel the value in those assets. So to name 2 PSU banks, State Bank and Bank of Baroda would be very, very key beneficiaries. Bank of Baroda itself, the management sounded very confident that most of the NCLT or the provisioning pain would be over with in this quarter. Then you look at some of the power finances. Today's headline was that there could be a JV between the power lenders on the back that some of the NCLT cases would be very good investments with a 1 to 2 year horizon. We think PFC at 85 rupees has a very good risk reward for a target of 120 in the next 6 months. Same is the case with REC, where there is 7.5% dividend yield, and if this liquidity infusion goes into them and this resolution of some of the NPA, which one day guideline goes, then I think they could be very, very valuable wealth creators in the next 6 to 9 months.
Okay, and PFC is actually recovered from its lows of the day. The stock's now trading in the green. Remember, both REC, PFC have been trading at their 52-week low level. Sanjeev, appreciate you joining us today with your views. Okay, let's move on and talk about the stock that is in focus, and that's Pocardna. The stock has not had the best of the last 12 months. Let's discuss the prospects of the company going ahead with Gautam Chand Jain, the CMD of Pocardna. Also joining the conversation is Nikki Mirchandani from our research desk. Nikki, over to you.
Thank you, Navneet, for that. Hello and welcome to Bloomberg Quint. Since the company has signed an agreement for a partnership with IKEA to serve as its supply and installation partner with regards to its quartz business, the first question that I have is, how has the partnership with IKEA panned out, and what are the size of orders that we can expect going forward on annual basis?
Honestly, it is too early, because though we are in regular contact for last 1.5 years, because IKEA goes through a lot of inspections and approvals and trials and all. So though we have started doing the mock-ups for the IKEA forthcoming stores, but as far as the volumes are concerned, it is too early. As per their projections, it is around 30,000 kitchens in 4 years' time, 4 stores. So in terms of, this is a projection they've given only for the 4 forthcoming stores which they've already finalized. That will be in 3 to 4 years' time. So volumes, it's too early to tell, because the first store will be rolling around May, June. So it is that is what we expect, and their projections are really big, but nothing has started yet.
Sure. I believe our cost business has been improving. I'd like to understand if there are any new product launches in the offing, and if at all, what's the kind of response and demand that we're garnering for it?
Yeah, we did a launch of almost 22 colors in the last kitchen and bath show, which was there in Orlando, and continued with the same colors to showcase in the Xiamen show in China. So we got a very good response of these new look colors, and we hope that the market is good, so the business will continue to be good. There is, of course, difference between the Breton stone players and the Chinese machine players, and the quality conscious customers look at a Breton stone plant product, whereas a common man who doesn't understand the product quality goes in for unbranded and Chinese machine-made products. So this is how the market is today.
Well, the crude prices have been on a boil. At least they have strengthened for 2018. I'd like to understand if that will have some kind of bearing on the margins, and would we still be able to achieve a 30% plus kind of margin going forward?
Yeah, we hope to do that because of inventions that are possible in the Breton stone plant, and we always keep innovating new products where the margins more or less are sustainable, and the market more or less pays this kind of price to all the Breton stone plant players. So we do hope that more or less we'll maintain that.
Well, US is an important market for quartz. What would like to understand your strategy for that particular market, and also the kind of demand that we're witnessing in that region?
Our majority of the business comes from US only, and the market growth there is more than 15% compounded every year. So, and it is expected to even increase further. So the market in US is now more on quartz rather than on granite. So we do hope that this percentage of growth should continue for at least 6-8 years more.
Sure. A little bit about your bottom line performance. Since we've seen a substantial reduction in corporate tax rate in US, you think will that have an impact on the bottom line performance of your company?
Yeah, that's a good question because there are few manufacturers of quads with Bretonstone technology in US. So they will gain more than what we can because our taxation is still very high and their taxation will be low in terms of income tax. But overall, if you look at the market for quads, because there are many players who are still exporting to US market because there are only few players in US market. So the market cannot get the quantum of products out of US manufacturers. So they will still continue to depend on the other countries who has Bretonstone plants. And also there is a sale of Chinese products in US market in the low-end segment. So advantage, of course, will be to the American manufacturers, certainly.
All right, while I do understand that our focus is constantly on the exports market, but then what's the strategy in terms of your granite business domestically?
No, right now, I don't know whether you are aware, almost 99% of our realization in quad business is out of exports. And even there, almost 90% is from American market. So there will be a market share possibility when we launch in the domestic market. So we are planning to have a launch in the domestic market in near future. And obviously the market share in the domestic market, we expect at least because we will be in the higher end of the market. So we will definitely have about 20% of the market share in the first launch itself.
All right, Mr. Jain, the last question that I have for you in that case will be your greenfield facility which is coming up in Hyderabad. I'd like to understand the total capex reserved for that, and also how do you plan on funding this kind of capex?
Yeah, because the idea was that to service the IKEA upcoming market and also to service the domestic market, we thought of putting this greenfield facility in Hyderabad. And we have a proposed outlay of 325 crores for this facility. And obviously, we'll also have future expandable capacities, possibilities in the land. So it's a little early to talk about the new facility. Still, it's not up and running. But yes, 325 crores is our investment outlay for this plant, and it is being funded by a consortium of banks and our internal resources.
All right, Mr. Jain, thank you so much for your time. It was a pleasure talking to you. Well, in that case, this is the management of the company sounding confident about the IKEA partnership and also about its domestic capex plans. Back to you guys.
Thanks a lot, Nikki, for that interview. But just want to address the market before we go across to Saloni. There's been a sharp rebound from those low levels. In fact, 30 to 35 points from the lows of the day has been the recovery. So as we speak, Nifty is somewhere about the mark of 10,130. And my producer also highlighted there's a sharp surge that was seen for Cipla. If you could just pull up the intraday chart of Cipla as we speak, there has been a surge almost 1% higher in the last 5 to 10 minutes of trade. Hemen, your 10,300 call, if somebody would have bought when you gave the call, probably premium would have gone up. But what about Cipla? Can somebody take a fresh trade here?
I think so.
Yeah.
Premium went by $7, but some more. I think there's going to be a 80-point upside in the next 2 days. Cipla, Nalco, Marico, PFC, Engineers, dead cat bounces. I'm not saying there's a trend reversal, but like I told Neeraj, it was deeply overdone. I mean, there's nothing left. So a bounce, yes, Cipla, one can participate. I think it quantifies the BTSC and a few other stocks I mentioned. So I think it looks decent for a couple of days.
Sumeet, we're not talking really about a change in trend or anything, but just that just that small pullback in the markets that we're seeing. Are you playing that from a BTST perspective?
Especially if we talk of index, then I think it's better to avoid BTST at present, because I think we need to wait and watch for next 1 or 2 days how the market spends and how we actually see a movement in the market. At present, closing below 10,140 levels will be a bearish sign for the index, and if that And if that happens, then there is a possibility that we might see a fall of around 80 to 100 points from present levels. Today's closing will play an important role, and in next 1 or 2 days, how the Nifty gives movement, whether the move is on buy side or sell side, that will give the clear picture of actual move for next couple of weeks. I feel that till the time 10-140, 950 is not taken away again on higher side, and to be very precise, 10-200 is the actual level where we should see actual movement in the market, from where we can decide that market can again give good move. At present, it's better to avoid long positions.
Okay, that's the view on the index, which has recovered at least 35 to 40 points from the day's low. But on to the chart of the day. Analysts are turning positive on the radio space. Saloni Dhanuka has been speaking with them to find out what is the reason behind that move. Saloni, over to you.
So Navneet, analysts are turning bullish on radio stocks on the back of expectations of higher government ad spends in the run-up to the election year. Now, when you compare ENIL, that is Radio Mirchi, and music broadcast, that is Radio City, over 82% of analysts tracked by Bloomberg have a buy rating on ENIL. Well, 100% of the analysts remains bullish for music broadcast. Well, in terms of stock price performance, both shares of ENIL and music broadcast have fallen 5% so far this year. Well, in terms of valuations, ENIL trades at a higher multiple as compared to music broadcast in terms of price to earnings. ENIL trades around 40 times its FY19 earnings, while that of music broadcast trades around 30 times its FY19 earnings. Now, despite the expensive valuations for ENIL, analysts are turning bullish on Radio Mirchi. They believe that ENIL currently trades at fair valuation given the high growth prospects for the company. And one of the analysts, Ankit Keria at Centrum Broking, believes that the worst is over for ENIL and new stations will aid margins in financial year 2019 for the company. And he also believes that launch of new stations in the batch 2 phase and acquisition of TV Today stations will aid to the profitability for the stock in the near term.
Okay, Saloni, thanks a lot for bringing all those details. Just want to highlight a few stocks before we slip into a short break. Shilpa Medicare, that's the one which has been doing well. That's trading with gains of 8% as we speak. And not only that, the graphite makers, which had a gap up opening, stock like HEG, which went up to levels of 3,500, came off. But once again, from the lower levels of the day, buying has emerged. So 3,400 as we speak for HEG. Even Graphite India has been trading with mild bit of gains. And Jindal World, that's the counter. I don't know how much has it risen, 50 or 55% on YTD basis. This is the counter which has seen consistent buying momentum at least in the last 3 to 4 weeks, and that's also trading around the levels of 867. Okay, it's time for us to slip into a short break here and count down. On the other side, we get you the Fab 4 stocks of the day. At 3:15 p.m., we get you what the dealing rooms are recommending and also some closing strategies from our technical experts. Stay tuned.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. जिंदगी के साथ भी, जिंदगी के बाद भी.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. La.
Are
This bridge gets you in touch with interested investors, funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर list कर लूँ?
और क्या? शुभ काम में देर किस बात की? चल।
हाँ।
NSE Emerge, साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Back with countdown right here on Bloomberg Quint, and well, it's just gotten worse again. So that bit of a pullback, and now down about 81 points again for the Nifty, 10,114. So no real juicy, meaty bounce back. It's the same set of stocks, of course, which continue to languish. And a strong stock in HCL Tech, for example, has come under pressure. Bharti Airtel, which had shown some of her bounces coming under pressure today. So some stronger names too are getting sold off. But in a market like this as well, with the mid caps and the small caps sold off really badly, we still have some stocks doing reasonably okay. Yash Upadhyay joins us with the Fab 4 stocks of the day. Yash, good afternoon.
Good afternoon, Neeraj. So, Shilpa Medicare tops our list. The stock is up about 8% or thereabouts after the company said that it has received the US FDA's inspection report for its establishment inspection report for its formulation unit located in Telangana. Now, this is the same unit which had received some 10 observations under Form 483 back in December, 7 of which were regarding the improvement of its practices and procedures. So, good news for this one. Graphite electrode manufacturer HEG is up about 7% today. A big bulk deal came in on Friday wherein investment banking group Vanguard had picked up close to 4.5 lakh shares, about 1.2% stake in the company. And also we are looking at Ashoka Buildcon. This one received a big order today. The company was declared the lowest bidder for a highway project from NHAI worth close to 1700 crore rupees, which will be executed under the hybrid annuity model. And finally, don't know what's making this one bounce. United Bank is up for a third consecutive day, following up on the 8.5% plus kind of a move that we saw on Friday. Volumes too coming in significantly higher at over 5.5–6 times the 20-day average. Back to you.
Thanks a lot, Yash, for bringing those Fab 4 stocks of the day. And if you could just pull up the chart of Idea, that's come under pressure in today's trade. Idea is trading with cuts of nearly over 4%, so almost around the day's low level. Hemen at 77.6. How are the charts looking for this one?
Idea, we have supported around 76, Navneet, and 76 and oversold. There's no reversal yet, but yeah, it remains oversold. Yeah, there could be a small fall to 76 or so, Navneet. Don't see it going too much beyond that actually.
Okay, that's the view coming in on Idea, and index is once again below the 10,100 mark, down almost 100 points for Nifty. Let's bring in independent market expert Dharmesh Shah, who's joining us on the show now. Hi Dharmesh, good afternoon. Thanks for joining us today. It's Dharmesh Kant, sorry if I spelt your name wrongly. Dharmesh, wanted to check what's the mood right now. There are several factors floating in the market for the sort of correction we've seen. I don't know if it's the political scenario which is weighing on the markets. Is it the year-end phenomena where redemptions are taking place? What should one do in a market like this? What should the approach be?
Yeah, good afternoon. See, the market, if you look at the texture of the price action which is happening in the market, is one step up and then 2 or 3 steps down. This is how this market has been trading for last couple of months. And the best way to deal with such kind of a market is to sit on the sidelines and wait for it to stabilize. And the primary reason to my mind is not political scenario or year-end phenomena or something like that. It's primarily to do with the earnings trajectory. If you look at the Nifty EPS, when we started the year, almost all the analysts on the street, including myself, we all were hoping 500 plus kind of an EPS for Nifty. When the third quarter earnings were announced, Psu Banks, which was supposed to be deliver the, most of the EPS growth, turned negative. They were the biggest drag on the Nifty EPS, led by SBI and other Psu Banks, and the Nirav Modi fiasco which happened. So now again a lot of provisioning will happen in Q4. And what will happen is the EPS growth for this year, for FY18 in Nifty, would be around 4 to 5% on an annualized basis. At best, it will be 7%, and the market is trading at 23, 24 times PE multiple. So this adjustment of valuation was to happen because the markets were heated up, and around 10 to 12% kind of an EPS miss is a big thing. So 427 was last FY17 EPS. So 450, 455 would be the best case scenario. In that kind of, context and how again the scams are spurting out, it's very difficult for the market, the serious investors to step into the market as of now. So now the next trigger, to my mind, would be the announcement of monsoons, not the earnings of Q4. So that has to be closely watched, and till that time it will be gyrating. So stay away. That would be the sound advice.
Look at some stocks. TV today is down 11.5%. Intellect Design Arena 8.5%. Future Consumer, the star of Thursday and Friday, is back to losing weight, 7.5% down again today. This one may have some really bullish targets to its stock price, but gets sold off at every available rally. And then JP Associates, again, a start of the last week, not just the last 2 days of the last week. The start of last week has seen some major correction to 6.5% lower, and Balrampur Chini continues to grind lower, now at 80 bucks. This one has fallen from 125 or thereabouts all the way, almost one way, to about 80 odd points. So it's not a great time to be hunting for some of the mid caps, I think, as Dharmesh mentioned as well. Dharmesh, what do you do with some of these stronger names, all of which are tailwinds? IT, the best performing sector, but now starting to see some selling pressure, maybe some profit booking that is happening as well. What do you do here? Either large cap IT stocks like HCL Tech, etc., or mid cap IT, the stocks like Mindtree, Persistent, etc.
So that is my biggest worry. If you look at the the pullback which happened a couple of weeks back into the Nifty, it was primarily led by IT stocks, and IT fundamentally nothing has changed out there. Mid cap and small cap IT stocks went above the roof as far as valuations are concerned. Even the large caps, be it Infosys, TCS and HCL Tech, rallied quite aggressively. TCS has seen some correction because of the offloading of the stake of the promoters. But again, so to my mind, what I am worried about is when the numbers are announced for Q4 in all of these IT stocks, numbers won't be great. It would be at best on the expected lines, and that's the muted growth trajectory which the numbers will come. And then this prices of the IT stocks will look very expensive then. So the selling will start happening out there. So IT will be down. BFSI, for a larger part of the BFSI market, except few private sector banks, will be seeing a downward trajectory. The earnings growth will be very muted. PSU banks will be reporting negative kind of earnings growth. So this will again pull the market down. So the point is, even IT is now setting in for a correction, though the correction is happening today early because of a fall in the US technology index, that is NASDAQ 100. So something to do with that. But this has to play out. So the floor for the market looks very difficult as of now, how the things are panning out. And if somebody is invested in Mindtree, KPIT and things like that, Persistent, it's time to take profit. At least book a part profit, 50% of the profit should be taken off the table.
Okay, now 10,079, the Sensex 313 points, the Nifty Bank 278 points. It's looking ominously tough and very likely that this pain might continue. Just bring up the global markets once before we get in a word from dealing rooms and a sense of what the F&O indicators are indicating for specific stocks as well. But bring up the European markets, which are all facing a fair bit of pressure, and the Dow futures too should come up on your screen. They were down 50 points, now just about 8 points. So maybe the Dow futures are not reacting as much, but Europe is under a fair bit of pressure right now, and that's maybe the set of markets to look at, putting that excess pressure on the markets as well. Navneet, what about stocks, specific stocks? I don't think the ban or no ban will really have major impact, but nevertheless, what stocks stand out?
Well, few stocks, Neeraj, which could be in focus for tomorrow's trade. One of them is Reliance Communication that could enter into the F&O ban for tomorrow's trade. If you look at the overall open interest as a percentage of market-wide position limit as in Friday's close was nearly 91%, and for a stock to enter into the ban, it has to breach the 95% mark. In today's data, if you go by that, the March futures as well as the April futures, in fact, of Reliance Communication have seen a good amount of OI build-up. What may come out is Bank of India and also TV18 broadcast. Remember, for the stock to come out of the F&O ban, it has to fall, the total OI has to fall below the mark of 80%, and these two stocks are pretty close to that, and we've seen some unwinding for a couple of the option strikes as well as the March futures of Bank of India as well as TV18 broadcast.
Okay, we'll watch out for these, but the time now is to find out what dealing rooms are watching out for. Let's get in Darshan and Yatin with their sense of what their channel checks are telling them. Good afternoon, both of you. Yatin, let's start off with you first.
Well, Neeraj, the dealers we speak about and talk to have been, quite nervous, especially in the last 1 week. We are in March, and the kind of selling pressure that we are looking at in certain mid caps is very painful. In fact, a couple of portfolio managers we spoke to have been talking about that since December, their NAVs are down anywhere between 20 to 30%. So that is the kind of pain everybody is going through. Despite some small, ups and downs, overall portfolio seems to be slightly damaged. Of course, on the flip side, we have SRF, which is holding out, and dealers on the basis of F&O trends do indicate a BTST strategy as far as this specialty chemical maker is concerned. Apart from that, watch out for sugar stocks, especially the likes of Balrampur Chini, because dealers do expect that there could be some further downside in sugar stocks, and they recommend their client either to take short positions or look at exiting from certain sugar names. Today down 5% as well for Balrampur Chini, and watch out for Jamna Auto as well. This is one stock in the commercial vehicle play which is holding out quite nicely in the last 1 week or so, as we are looking at some PMS funds which are accumulating the stock even at current levels. But Darshan has a few more stocks to talk about.
Yeah, so one of the stocks that bucking the trend today is Nalco. It's trading up almost 2.5% in a rather weak market. Some of the domestic funds are aggressively accumulating Nalco. One of the key reasons that a large domestic fund, domestic brokerage is recommending, and they believe that the enterprise value is pretty much equal to the value of the power plant that they have, and that means that the other businesses, the smelter, the refineries and all, you're pretty much getting it at a free valuation. So Nalco is something that's been spoken about. One of the other counters is Adani Enterprises has risen significantly from the lows of the day. There's a buzz of a possible corporate announcement that could come in on the counter, so that's been spoken about. And finally, the last stock is and that is actually down in trade by almost 7%. One of the key reasons is the fact that iron ore prices have fallen off a cliff. But the second reason is, if you take a look at the corporate actions, what has happened is in a long time, for the first time, NMDC did not declare a dividend, and that a lot of people had bought for bonus stripping. So if that didn't come through, people have actually been offloading the stake, and that's one of the key reasons why NMDC is also down in today's trade. So that's what's been spoken about.
Interesting, Darshan. Many thanks for putting that into perspective. Dharmesh, any thoughts here? NMDC, typically this should be happening, right? Dividend yielding companies not coming out with a fat announcement tend to be met with disappointment. What do you make of NMDC and the move today?
See, as far as dividend has not come, that's definitely, I don't say it's a disappointment, but the reason why they did not declare dividend should be looked into, and that would be the point I would be looking forward to from the management to know about whether it is because of this steel plant which is coming up, they want to divert that money out there, and what was the reason why the dividend has not been declared, because government also gives to such kind of dividend payouts when it happens. So that is should be the more important aspect. But as far as the company is concerned, the stock price is concerned, I think it's a good value buy if it's you're getting it at a correction. So stocks like NMDC, Hindustan Zinc should be acclimated on all declines. So one can, in this market, in such a treacherous market, one can afford to be a bit aggressive and bold in buying such stocks.
Okay, that's the view on NMDC. Pull up the intraday chart of IDBI Bank. So far, Bank of Baroda was the one which was leading the losses among the PSU banking stocks. And there's been a sharp fall in IDBI Bank, which has come in the last, I guess, 15 to 20 minutes of trade, down almost 8%. Remember, this is also one of the stocks which has outperformed the other PSU banking stocks on YTD basis. Hemen, on the charts, what does this sharp fall indicate?
It's a retracement of the rise. Navneet has been bouncing around like a crazy ball. 91, 61, 61, 82, 82, 71. So it's been here and ultra volatile, Navneet. So I'm not sure one can read too much into it. There's support coming in at 69. But having said that, if you look at IDBI from a slightly longer term point of view, Navneet, 4 years it's gone nowhere. It's moved between 50 and 95. So that range bound movement for 4 years continues.
Sumeet, what about the stronger names, the likes of HCL Tech and Bharti Airtel?
See, Bharti Airtel has also given a negative move today. It has immediate support at around 390, 395, 394 levels. If these levels, if the levels are taken away, then there is a possibility that we might see fall till 370, 75 levels. I think immediately it's better to avoid long positions in Bharti Airtel because the counter is looking weak and there is a possibility, the way markets are giving correction, there is a possibility that the stock might break the support and we can see levels of around 370 in next couple of days. So at present it's better to be on sell side in Bharti Airtel.
Okay, let's try and get in closing strategies from both our experts. Hemen, to you first. One top closing strategy.
I'd rather not give a strategy, but I thought it had turned. Evidently, it's not. But having said that, I'll go with the BTST on Nalco, Neeraj. I think Nalco looks like bouncing. We're at around 60. We're at around 67. So a BTST on Nalco.
Okay, BTST on Nalco, but Hemen rather not give a strategy. Sumeet, what about you? A closing strategy from your end?
Strategy should be on sell side. Apollo Hospital is looking weak. Stock has given a breakdown. It's trading below the support levels. From here on, there is a possibility that we might see a fall of around 80 to 100 points. 1060, 1070 are levels to initiate sell positions, with a stop loss to be placed at 1090 or 1100 levels on higher side for the downside target of 1000, or even we can see levels of around 980 in next couple of days. So Apollo Hospital is a good sell at current market price.
Okay, so those are the trading strategies coming in from our technical experts. But Dharmesh, talking about the fundamental call, any specific stock that you would buy at these levels?
Yeah, if if I have to stick my neck out, I think Oberoi Realty looks pretty attractive. It has corrected quite a bit, and around 490, 480 kind of a stock price looks very attractive to me. See, if you look at Oberoi Realty, the entire, the type of revenue which they would be booking in the next 3 to 4 years is humongous. So around 14,000 odd crores of likely, top line is likely to accrue to Oberoi Realty in next 3 to 3.5 years, and primarily from the 360-degree west, which is a South Mumbai project. 2/3 would come from there, and the other projects are also looking at pretty attractive. It's around the entire net worth by FY21 would be around 10,000 odd crores. It's available at 70,000 odd crores of market cap as of now. So 1.7 times price to book. Usually these kind of companies with debt-free companies, strong cash flow, operating margins in excess of 50%, PAT margin in excess of 30%, and huge land bank parcel, still available from them to further develop properties. So considering all these aspects in mind, price to book of 3 is always, very much on the card. So for 3 to 4 years kind of a perspective, 70 to 80% kind of a stock price traction I do see. 900 to 1000 is my target price for Realty. But for medium term perspective, around 20 to 30% kind of stock price gain is likely to be there, provided the market stabilizes and gives some semblance of stability. So one can buy Oberoi Realty in a staggered manner, say 30, 33%. 3 stages of buying can be commenced from now.
There's some stronger mid-sized names which are correcting today. So Sterlite Tech, for example, is down about 5.5%, 317. It's an expensive stock, yes, but a fairly strong name, which is seeing some bit of pressure. in the session today. Even on the Nifty 100, the clutch of fairly decent names which have come off sale, hitherto very, very strong. But look at the price cuts. It's corrected from 95 odd to 69. That's a really steep gash over the last few days in sale. And Interglobe Aviation is down about 4% as well. Yes, the planes being grounded, that scenario would be hurting. But there is pressure out here into these stocks as well. Any thoughts here? Indigo or SpiceJet, Dharmesh?
Yeah. So I never expected the stock prices to come down because of the type of, problem they have got into, especially the Interglobe Aviation with, technical grounds, the engine and all not being sound, and they're not being allowed to fly. I was expecting, because of crude prices flare up, these margins are going to skew, and very soon the valuations will, the stock prices will correct to the valuations. So to my mind, now this is again a big challenge and a big worry for the aviation sector in India, particularly with such harsh things happening on the technical ground. And this is a very high risky, because this is what matters most to aviation or airlines industry. But still, aviation as a sector is a void to me, because I don't see, the profitability in absolute terms, even spread over 5 to 6 years, matching the kind of valuations these companies are attracting. So, at best, a trading, bet one can take, but as of now, the entire sector should be avoided.
Okay, Dharmesh, we'll let you go on that note. Thanks a lot for joining us today with your views on the markets. Yeah. Well, index still trades below the mark of 10,100, and we've got stocks like Just Dial, I guess that's also down nearly 5%. Remember, it's there in the futures and options space as well. At 424, Hemen, it's been a weak counter, I'll call it, in the last 2 to 3 months. Is there any trade that you foresee?
No need. I think, like you said, it's been weak. A range of around 340. 640, and we've gone nowhere. Currently, I think it's setting the stage for one crack back to 380 and 360. The level to watch out for, Navneet, is 417. Looks weak. Maybe there could be some near-term relief, but it's setting the stage for a downward breakout, so no trade. I post this bounce, suppose a small bounce. If it closes below 417, then it would quantify the short trade.
Okay, and a sharp fall also seen on HCL, which is your top loser right now among the Nifty constituents. But let's head across to Neeraj to find out how exactly today the closing is panning out. And Neeraj, suffice to say, not good at all. We've breached a lot of key levels today, closing below the mark of 200 DMA for Nifty.
Yeah, and sub 10,100 as well. So yeah, a lot of key levels, recent lows, 200-day moving average, 10,100. Call you whatever, and 32,916 or thereabouts, so 260 points down for the Sensex as well. The Nifty Bank down about 1%, and the mid caps and the small caps have actually had a worse fate today. Deep gashes out there, which is why the market breadth has looked terrible. I guess a couple of percentage points apiece. The mid cap and the small cap indices will come up on your screen. A couple of points apiece. The small caps in particular, 2.25% down in trade. This index was up about 0.5% at the start of the trading day today. So that's almost a 3% gash in the index today. What about specific stocks? Hardly any gainers. Don't even look at that. I mean, Maruti and L&T, not really inspiring moves. But look at the losers. Tata Steel, Bharti, HCL Tech doesn't feature in the Sensex, but it's down. Wipro, Coal India, banks in particular. But if you just look at the top 10 losers, then an Infosys being there, but the HDFC twins are not there, ITC is not there, Reliance is not there. Somewhere out here, all of these names, so no deep gashes, which just shows that we are falling because a clutch of large caps are falling anywhere between 2% to 3%. And a large number of these names are falling apart, which is actually not a good sign. But suffice to say, Navneet, that the activity in the broader markets is even worse.
That's right, Neeraj. We did see a lot of cuts coming about for a lot of stocks, and as you highlighted already, for the broader market indices. But let me start off with JBF Industries. That counter was weak, I guess, for majority of the session, and it closed with a lower circuit with cuts of nearly 20% around the mark of 113. The other one which was in focus was TV Today. Remember last week or in the last 5 to 6 trading sessions, we did see sudden surge in this counter coming about. But today, the news finally came out that they sold their 3 radio stations to ENIL. So probably some profit booking post the news, but counter closing with cuts of nearly 11%. An outperformer of last week, Future Market Network. This counter was up nearly 60% in last week, and today finally there was some profit booking. The stock closing at a lower circuit with cuts of nearly 10%. In the last hour or last half an hour of trade, we did see IDBI Bank coming under pressure. That chart will show you a clear picture. The fall came in just in the last half an hour or so, 8% lower for IDBI Bank. And among the PSU banking lot, you also had Bank of Baroda, which did see a fresh short position coming about on the future side for this counter as well. But the metal stocks have been under pressure from the likes of NMDC, Steel Authority, which was in the ban period for today's trade. Both of them saw cuts of between 5 to 6%. And MCX, which gained last week, gave up all its losses in today's session, closing the day with cuts of 4 to 5%. Just want to highlight few gainers. Uttam Sugar rose in last hour of trade. So this is one sugar company actually which has been bucking the trend where the entire space trades with cuts. Uttam Sugar was up nearly 5.5%. Shilpa Medicare, stocks like Techno Electric and graphite makers like HEG, these are the counters where mild bit of outperformance was seen in a weak market like today's.
So this is what the markets are doing at close. 10 seconds left for the markets to close, and we all know that it's been a terrible performance, more so from the broader markets, but the large caps have not been devoid of pain. This is the final picture at close. We're closing down almost 1%, 100 points for the Nifty, and the broader markets too have had a lot of pain. The market breadth will come up on your screen for a minute. We'll also get in the top contributors list. Look at that. It's stayed steady, so about 1:7 in favor of the decline, so no changes there. A yawning gap which only stayed steady in the last 4 hours of trade or 3 hours of trade. The contributors list in technology getting clobbered today with Infosys and HCL Tech out there. TCS was probably the sole gainer, but banks, ICICI Bank and HDFC have contributed a little bit as well. No sign of HDFC Bank, no sign of Reliance Industries, no sign of ITC. And the gainers list, well, hardly any names to talk about. The turnover should be interesting. Let's see if the cash market turnover is inched up. No, not really. Turnover is actually suboptimal, at least on the cash market only.
It has come off. I think the last 2 days it was up. One because of the TCS block deal, and even on Friday, I guess the turnover was pretty much on the high side. But this is lower in the last at least 4 to 5 days that we've seen.
Yeah, does it provide solace though? I don't know. But the NSE F&O turnover, I would guess, maybe just par for the course. Yeah, just about going okay. Just seems to have damaged some key levels today's move, and with the global markets not providing support, it's difficult to see what will cause a bounce back, if any, in the immediate term.
That's right, Neeraj. In fact, if global markets don't give you that support, we've as it has been underperforming. You know what? You look at any of the key benchmark indices which are tracked globally, be it MSCI World, S&P 500, MSCI Europe, all of them have given you positive returns for this year at least. And we're down, MSCI India is down nearly 5%. So that speaks volume why there is underperformance despite of some recovery which we actually saw for global markets, but that's not come in for India.
For sure not. Let's wait and watch what happens here during the course of the week. It's an important week, mind you, with the Fed event coming in as well. So that's something that we will be monitoring. But final thoughts from all our experts. Sumeet, Bagadia, to you first. What levels would you now be watching out for? What happens during the course of the week?
See, the closing is very bad. If we look at the closing, it's below 10,100 levels, which says that markets are headed lower, and there is a possibility that we might see immediate target of 10,030, 10,020 in next 1 or 2 days. And if 10,000 is taken away, then there is a possibility that in this expiry we might see 9,900 also. Till that time, Nifty is not able to give closing above 10,200 levels. It's better to avoid long positions. Any pullback in Nifty from present level should be used as selling opportunity for the downside target of 10,030 as an immediate target. And if 10,000 is taken away, then we can see fall till 9,900 levels in next 3 to 4 days, or in probably next 1 week time horizon.
Okay, Hemen, would you play for a bounce back or would you stay away?
No, I high risk, but I still play for the bounce back. Bounce back to 10,129, 10,224. Beyond that, I don't see too much of an upside. But yeah, I have a feeling the market should end positive tomorrow, and we'd see a small 1.5 to 2 day recovery coming in.
And if we were to grind lower from these levels, where's the support coming in?
Support now comes in at 10,025, 9930, 9850.
Okay, so those are the key support levels to be monitored at least in the next few trading sessions. On that note, we would like to thank both our guests. Thank you very much, Hemen and Sumeet, for joining us today and taking us through the technical views on the markets. Well, it's time for us to head into a... Sorry, you're saying something?
No, that's it.
Okay, we'll head into a short break on this edition of Countdown. We'll be back with more on the other side. Stay tuned.
Life's so lovely, live life happily. Oh, plan your life the way you want it to be.
LIC's new endowment plan offers a combination of protection and savings.
Invest to save and get insurance. Bring home eternal happiness.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Welcome back. You're still watching Countdown with us on Bloomberg Quint Live. Well, let's now shift focus to Valorum's third annual analyst conference where infrastructure stocks are in focus. Joining us on the sidelines of the conference is Baroda, the CEO of Neela Infrastructure, and also joining in the conversation is Jayesh Khilnani from our research team. Jayesh, over to you.
Thanks, Navneet. Mr. Baroda, let me start off with the December 2017 order book that stands at about 587 odd crores. Can you give us a revenue, a mix of how this order book is stacked up in terms of the affordable housing segment and the others that you are in?
Affordable housing is 65% of the unexecuted order book, and the civic urban infrastructure consists of about 35% of the order book.
How much is the area under development for the affordable segment, and what kind of timelines are you looking at for the delivery?
Currently in the unexecuted order book, we have about 10,700 odd units under construction to be executed from our end, amounting to about 4.3 million square feet spread across two demographies, Gujarat and Rajasthan. The usual timeline of delivery for all of these projects is 24 months. However, some larger projects have longer timelines, but in general the timeline has been 24 months.
So now you are largely present in the states of Gujarat and Rajasthan. Do you have any plans to foray into other states as well?
Well, no immediate plans. In general, we have been actively looking at many states, of course, where we see there is a lot of infrastructure coming in. We've always worked towards thriving infrastructure. So a lot of states on the watch list, but as I've said in the past as well, I think we will look at the state as a contributor to the total revenue and not specific to projects. So we would not venture out to other states for a specific project unless it's too large, or where we look at it as a long-term vision of staying invested. So right now the product mix that we, or rather the geographical mix that we have in the domain is 60% from Gujarat and 40% from Rajasthan. So even if we add another state, we would want substantial percentage over a period of time coming in from that revenue. So it's not a set, but the opportunities are ample in both the states that we are actively pursuing, Gujarat and Rajasthan. And I don't think there is a need to venture out, but we are actively looking at for future. Yes.
Can you also give us a sense of the new projects that are in the pipeline for the next year? If you could break that up into the segment category and also the kind of margins that you will be expecting for those.
I think going forward, we will continue to work with EPC and PPP. The order book will keep on varying between both of them based on how we evaluate the market is. I think the sweet spot is that we have the capability to decide that what mix of products do we want to take in the next year as far as risk to reward ratio is concerned. And execution is concerned. And on the margin front, I think we've mentioned in the past that the margin has dipped once when there was only EPC revenues which were accounted for. Now with PPP projects getting into action, we will gradually see the margins doing better and better.
One final question on the real estate business demerger that you have announced. By when do you think that the entire process will be complete?
Well, obviously the matter is with NCLT right now, so I cannot comment on the exact timelines, but the expected timeline that we envisage is by June end we should have the approvals and all the formalities completed.
Thank you so much, Mr. Baroda, for taking the time out and speaking with Bloomberg Quint. Back to you guys in the studio.
Well, thanks for that, Jesh. On to the European markets. It's not been the best start to Europe as well. All three benchmark indices trading with some cuts. Let's go across to Sandra Kilhoff, who joins us from the London studios to talk about this moment or this start and the day ahead. Sandra, good morning. As was the case in Asia, so in Europe, the start not too good.
Exactly, we're seeing stocks decline. Investors very much bracing for a week packed with risk events. We're looking at central bank decisions, Brexit talks, as well as that G20 gathering in Buenos Aires. The Stock 600, the benchmark here in Europe, currently headed for its first decline in 3 days, falling 0.8%, while the FTSE 100 and DAX have both slumped more than 1% in trading so far. Now, in stocks to keep an eye on today, GKN has actually rallied 0.6%. That's after Dana and Melrose both offered incentives for GKN shareholders to gain support for their rival bids. Dana says it will trade its stock in London if shareholders approve its takeover of GKN's automotive unit. This comes after Melrose said it would shore up GKN's pension plan and ease shareholder acceptance terms for its hostile bid to 50% plus 1 share from its original 90% target. Meanwhile, also keep an eye on Micro Focus International. It's plummeted more than 50% here in London. That's after warning that its year-on-year loss would be greater than expected. The FTSE 100 company now expecting revenues to fall between 6 and 9% compared to previous guidance of a drop of 2 to 4%. It also says CEO Psu has stepped down. Meanwhile, if we take a quick look at fixed income, most European government bonds have followed treasuries lower, with Germany's 10-year yield advancing less than a basis point to 0.58%. 10-year gilt yields also climbing 3 basis points to 1.454%, the biggest surge in almost 3 weeks. Finally, in currencies, the euro is trading flat against the dollar, while sterling has advanced 0.2% to 1.3966. Back to you.
Thanks a lot, Sandra, for bringing in all those details from the European market. Well, back home, Lemon Tree Hotels will be coming out with its IPO that opens for subscription from March 26. Ridhima Saxena caught up with the chairman and managing director of the company, Patanjali Keswani, to discuss the company's expansion plans, its financials, and also growth outlook in details. Here, a slice of that conversation.
Currently, we are adding 3,000 more rooms. So by FY21, as we've declared in our RHP, we'll have about 7,700 rooms. The next lot, these 3,000 rooms, 1,600 are owned by us or leased by us, and 1,400 are managed. But of course, long term, we would like to really go asset light. And future growth will be primarily driven by our management and branding of other owners' hotels.
So, then it becomes imperative to ask you, how do you then plan to move towards more of managed and branded hotels from an asset-heavy model like the one that is there right now?
By our performance. So I expect that when we declare our results and owners see the kind of, different owners see the kind of returns we give, including our existing owners, then through word of mouth and through our own business development efforts. Like any other hotel company, we would look for for improving, creating value for owners and expanding our network. So I think it's a fairly standard model, and it's happens worldwide.
When we look at the cash flows, however, the cash flows from operating activities have been positive. It is the cash flows from the investing activities in this particular year that have turned negative. Earlier, the cash flows from finance activities were also negative. Could you help us understand whether it is only because you were expanding and opening new hotels? Why exactly have they been negative so far?
Okay, so think of it this way, that you have two sets of assets. One is operating assets, and one are assets which you are building for growth, right? So by and large, I think from the time of inception of Lemon Tree, we've always been cash positive from the operating perspective. But since we have grown so rapidly, and we've grown at the rate of 44% a year in the last 15 years, compounded annual growth rates in supply, so that has required a lot of investment. So obviously, in the accounting terms, what we do is we sometimes treat investments as and adjust it against cash requirements or cash profits. But if you break the two businesses into operating assets and investment in new assets, then we have generally always been cash positive in the operating side. And in the last 4 years or 5 years, we actually added 40% of the current inventory. So that was a very large investment in assets, which was over, if I remember right, over 50% of our total investment happened in the last 5 years, which was bottom of cycle. And therefore, the company's investments were much larger than any internal accrual that we had. But we are now perfectly positioned, and we were hardly cash negative actually, even in FY15 and FY16. So going forward, you can consider the last 5 years as an investment to when the market turns, which has finally started happening.
So you're saying that all the expansion that will now happen for Lemon Tree, most of it the investments for that has already been taken care of?
Yes. Well, all the equity investment has been made. Going forward, there will be some internal accruals, which we are fairly confident about, and we will take a little more debt. But at no point will our debt equity go beyond 1:1.
Okay, speaking of primary markets, Hindustan Aeronautics IPO 2 is currently open for subscription. The country's largest state-run defense manufacturer is hoping to mop up 4,200 crores from the issue. Yatin Mota caught up with the company's officiating chairman, VM Chamolo, and began by asking him about HAL's order book. He listened into a small part of that conversation.
today, if you see, our order book is 68,000 crores.
Okay.
And 68,000 order consists of various platforms of what you call fighter aircrafts, trainers, helicopters, engines, various segments. And now, insofar as future orders are concerned, we are expecting around 60,000 crores, which will be basically again into fixed wing LCA 83 order is almost in the final stages now. RFQ is already there, and 15 LCH. With that, our order book will definitely go up by around 60,000 crores.
Okay. So, sir, since you're talking about 60,000 crores worth of order which can come in, by when do you expect these orders to get finalized by the Government of India?
This should get finalized by maximum within the next 2 years.
Okay. And the current order book that you spoke about, which is close to 60,000 crores, in terms of execution or visibility, by when will you be able to execute this order?
Normally, if you see the sales turnover of HL, 17,605 crores for the last year, it gets neutralized within maximum 3 to 3.5 years.
Okay. So one more question on the business strategy front. A lot of government focus is on reducing, dependability on overseas markets for defense products. Also, there have been various initiatives under Make in India. A lot of PSUs and private companies have started to participate in the defense story. So, in terms of your strategy, and given the fact that the competition might move up in the foreseeable future, what is the strategy for HAL to survive in the ever rising competitive market in India? And also the government has started placing orders to various foreign companies also in aeronautics. So how does HAL stand in this particular competitive landscape?
It's a very good question. Insofar as HAL is concerned, HAL has been in business for the last 77 years. It is not only that we rest on legacy. I can tell you with quite confidence that HAL has been the spearhead of Make in India. We are today, if you see the ecosystem which we have developed in the country, we have 2,300 partners. Around 1,000 are from MSME sector. If you see one of the very recent examples, you must have heard that say 100th empennage, which is considered to be a very important aspect of an aircraft structure, was developed and supplied by one of the Indian vendors. And quite a number of vendors which we have developed in the country are not only supplying to Indian manufacturers, mostly HAL, but even Boeing and Airbus also. I can tell you this strategy which we have. First is the question of competition somewhere upsetting HAL, I think is not praised properly. It is misplaced. HAL will continue to play a very dominant role insofar as the future aerospace scenario is concerned.
Okay, equity markets are underestimating the Fed's rate hike plans, and that's the word coming in from Krishna Mimani of Oppenheimer Funds. Speaking to Bloomberg, he speaks about the widening trade deficit in US. Listen in.
The economy continues to do well, but not super well as people were expecting. And I think that's really the issue that the markets are dealing with. After the tax cut, the expectation was all of a sudden the economy will accelerate, and it certainly hasn't happened. And I think from a market's perspective, that's probably a good thing rather than a bad thing.
Do you think that we see the dot plot change next week?
Well, I think that's entirely possible, and if that happens, and if especially what I'm focused on is what happens in the back end of the dot plots. What are they communicating with respect to 2019? And that would be far more telling than what they do with respect to 2018. Whether it is 3 or 4 doesn't really matter. How aggressive they're going to be in 2019, I think, has a significant bearing on the direction of the markets.
Well, how far do you think the markets could be off in their expectations for 2019? Or what do you think the sort of range of outcomes is?
Well, so I think the markets could be very off. There's, again, I don't assign underestimating the aggressiveness that the Fed has. I'm hoping that is not the case, but I think there is a possibility that entirely comes about.
But why? You look at the data, and obviously the U.S. is growing. It's fine, but CPI report, wages, it didn't jump out to me as, oh, this is an economy that's overheating and can't handle it. So why do you think that there could be this step step change up in the pace of rate hikes?
I think it's because of the deficit finance spending that'll come towards the end of the year, which hasn't so far we have had just tax cuts.
Right.
But the spending related stuff actually comes later in the year. And I think that's really the question that the markets have to deal with respect to the economy. Our expectation is the economic growth that is still modest, and a lot of the deficit ends up leaking into overseas markets and helps emerging markets, and the U.S. trade deficit widens. And that's the thesis. So whether that ends up being the case or not, we will find out in due time. I think that's the part that scares the Fed far more than the strength of the economy on the backs of tax cuts today.
Property prices in Mumbai may be headed lower. That is, the government draft ready reckoner is implemented and revise the rates downwards. But even that may not be enough to bring back the demand in the market, according to Gulam Zia of Knight Frank. On the other hand, Anuj Puri of Anrock Property Consultants is optimistic, saying he's already seeing an improvement in sentiment. Listen in.
All these are, to the way we are looking at it, may not really excite the large masses of the buyers to come and start signing the deals. The reasons, first of all, there is no such provision that real estate rate on ready reckoner can only go up. Ready reckoner is only supposed to be a reflection of what's happening in the market. Unfortunately, there is a gap between the understanding of the market realities as far as the government surveyors are concerned, as Anuj just mentioned rightly. There is a lag in for them to really relate to it, accept it, absorb it, and then pass it on in the ready reckoner that the rates have come down or not. Now, that is something which is once again, as Anuj mentioned, people are waiting for ready reckoner rates to streamline so that the stamp duty implications are brought down, because otherwise they were paying, for no reason they were paying so much of money for the stamp duties and paying to the government. Now, your question was whether all this suddenly bring buyers back in the market. May not be so immediately, because while a lot of things that you're talking about are falling in place, the economic sentiments are not really falling in place yet. So the numbers, the GDP growth numbers, the employment growth, etc., that we're talking about are yet to really show on ground. And that is something which people are not really comfortable about unless and until there is a stability in wealth creation side, on job creation side. This may not really happen immediately, and the counter effect of the ready reckoner rates coming down also has to be weighed in, because what typically happens is government bringing the ready reckoner rates down is taken as a stamp of approval or a certainty that the tides have changed. All this while prices were going up, while in reality the buyers were paying less. But then there was always a question, how do you know? Can you really establish? Because the markets are not yet so crystal clear that I can really put across all the data and say here the rates have started coming down. But when the ready reckoner rates start changing the trends, says that now the rates have started coming down, here starts a different phenomenon altogether. It's something they call the falling knife. The buyers then are waiting for one more day to see some more price coming down. Yes, there are buyers who will still buy. These are the ones who genuinely need the house today on date for some reason, so they will buy. But those who can afford to wait for next couple of months, etc., will still wait to see really more of a correction coming down. The ready reckoner value is only an indication that the falling rate regime has begun. So there's a lot of these reasons for which I want to quickly and simply answer your question. The markets may not really turn so soon. I would say next year and a half would still to be watched, and let's not forget the general election also have a huge impact on real estate. During the years of general elections or main big elections, the real estate always takes a step back. Of course, immediately after the election, if the results are favorable, then there is a sentiment improvement and the markets start coming up again. But at least for next year and a half, if you're asking me, once again, markets may not improve so good.
Okay, we're coming to the end of the show, but I have a minute each for an answer from both of you gentlemen before we conclude this discussion. Anuj, would you agree with that? And the reason I'm asking you this question is, buyers anyways knew that if you go to a builder with a check ready to write, you are getting the ticket slightly lower, maybe 10%, maybe 15% lower any which ways. So that option was anyways available. If all of these measures lead to the ancillary taxes also being lowered, doesn't that induce confidence? And was probably that one reason why, I mean, we've seen buyers coming back in a meaningful way in the first couple of months of January and February in Mumbai and Bangalore, as per your report as well. So would you agree with Gulam on that front?
So I partly agree with Ghulam, Neeraj. Having said that, I can tell you is that I've just got about half an hour ago data from our sales team, Friday, Saturday, Sunday, which was Gudi Padwa. It is just outstanding sales that have happened. I mean, amazing. So it has beaten the record for 2016. It has beaten the record for 2017. Some of these developments, we've sold some 87 apartments, 102 apartments in 3 days. And these are solid developers. They are not at, 10, 20, 30 lakh rupees. These are, projects at 1.5, 2 crore rupees. So suddenly I do feel is that there has been some correction in the price. There has been some positive movement, good quality developers. Certainly the momentum is coming back into the market. Is to answer your question, I think is that initiatives like these will help to bring further momentum, but I think the momentum has started to pick up. You're right, January, February was good, but this Gudi Padwa, the last 3 days have been just outstanding, which I've not seen in the last couple of years.
With that, it's a wrap on this leg of Countdown from Navneet and me and the team that put this show together. Thank you so much for watching.